as I'm sure everyone on this call is aware, that sector of the business has seen substantial activity and leasing, commitments here over the past 12 plus months, and there seems to be a lot more coming. And so owners and investors and developers are having to, find a way to create space for these larger users from out of market. And so the goal that the board, kind of established for the first event was to, let's talk about how owners and investors and developers are using the existing product that's already here. And then what does the future hold within this sector of the business for us as we move forward with a larger life science ecosystem here within the marketplace. So, we have three panelists here today. Greg Capps with Longfellow, obviously director of leasing for them. They're based out of Boston, but have a large presence here and are growing their portfolio significantly. Lee Clyburn with CBRE on the Landlord team, who has a significant amount of life science experience within the market for many years and is currently working with some of our, large institutional investors. And then you have Jeff Sheehan with Trinity Capital, who has made a few acquisitions here recently in the life science sector of the business that have already seen some success with a few larger leases. And then as well, he's looking at repositioning Southport after that acquisition. And so wanted to speak with them about, what they're identifying, what they're targeting, and how they are accommodating the different users within the marketplace that are looking for life science space. So I want to thank them here for their time and for committing to being with us today on this virtual panel. And kind of just as a first question to get started, and love for Lee to kick it off, but, just starting with the past year, Lee, over the past year, obviously we've had a significant amount of increased demand within the life science sector. Can you share your thoughts on what the past year has been like, and what do you think is most important for the tenants that are growing within the market or looking to move into the market as they open an office here in Raleigh?
Well, thank you for having me, and always good to be with Greg and Jeff, who both do a great job in this space. So we bump into each other quite a bit. But I tell people we are sort of the maturation of a 40-year effort. I mean, life sciences was, as a state, we were at the forefront of creating an appealing market for this industry, and that started 35 years ago, when nobody could even spell biotechnology. And so we always had pharma in North Carolina, in Sanford, and in Greenville, and in RTP. But the sort of growth of young companies that emerge and take 5 to 10 to 20 to 30 to 40 to 50,000 feet until they get acquired, which is what usually happens. That is a fairly recent phenomenon in the real estate world. What the park, most of our inventory is in the park, of course, because the assets the park has always offered, which is great talent. We spit out graduates every May that want to stay here. Good real estate at a reasonable price and a stable pro-business environment. I hear every week from people leaving California or New England for cost or regulatory burdens. So you put all of that in the mix and it just continues to evolve. I mean, the Grail group came out of New England, the Beam group came out of New England. There's a half a dozen 100 to million foot requirements on the ground. Most are out of market, and they all want to be here to tap into the talent and still a great quality of life. It's nothing new. It's just we have an ecosystem in life sciences that is number 5 in the country now.
Greg, would you like to chime in from here? Same
Sure.
question.
Sure. Yeah, obviously echo everything Lee just said. Over the last 12 months or so, activity's been, in a nutshell, it's been very steady. Obviously life science companies are not really set up to for the work from home environment. So, our buildings have been open and operational, and we've seen the activity steadily increased. Really, there was obviously a little bit of an adjustment period last March where things, slowed down for everybody. But once companies kind of got their feet underneath them and figured out how to space out employees in their labs and do things to keep people safe, the spigot kind of turned on and just continued to kind of open up a little bit more. It seemed like every month that went by. So, obviously we are in a great spot here. There is, it's interesting. You can look, between the new investment and added investment to the market with new folks coming in and buying real estate and looking to convert to lab and life science space. You could listen to some of Alexandria's investor calls. It seems like just a few years ago where they were kind of on the fence about whether or not they were going to continue to grow in this market, and then all of a sudden they make the moves that they have over the last 6 to 12 months with the growth here in this market. So all those things really just kind of point towards really steady and healthy activity. So there's hundreds of thousands of feet of deals in the market right now. There's a lot of good things going on. You look at employment numbers in the life science industry. You look back to like 2000 and to today. The increase is something like 88 or 89% over that time period. When you look at kind of the rest of the U.S. markets as a whole, and that growth is more like 14 or 15%. So it's been, to Lee's point, it's been steadily growing for a long time, and we're definitely seeing more of that here over the last 12 months or so.
And Jeff, on to you and Trinity Capital. You have a few recent projects that are, conversions of existing assets with the former Nortel campus, and then obviously with Southport. So would love to kind of hear your thoughts and your visions there and how they've been received by the market so far.
Yeah, great, Isaac. Thank you, and thanks for inviting me to the panel. I can't see myself on the video. I'm on Zoom calls all day, every day. I'm not sure what's going on. Can you see my video?
I cannot. No.
Yeah. All right. We'll try to work on that. But in answer to your question, in terms of the acquisitions that we've made, and just generally for this market, there's a wall of capital that's interested in life science, right? The word is out. And if you pull the lens back out of our market and look nationally or even internationally, there are only so many markets, so much of this space and so many markets where you can invest. So some of our interest is fueled by the capital side of this equation, and then of course the fundamental demands that we're seeing here in our market. In terms of Park Point and Southport specifically, entering into this space via acquisition and repositioning is a lot safer way to do it. You cut out development risk, entitlement risk, et cetera. And it's also advantageous from a speed to market standpoint. We're all seeing the demand now that's strong, compelling, and like with any other real estate sector, office or industrial, events can happen that can change the demand. So the ability to capitalize on the demand now while the getting is good, so to speak, was an attractive way with these two projects. Then, of course, just speaking, the product type itself, both at Park Point and at Southport, lend themselves well to user demand, user needs, user criteria in this space. So that was attractive as well.
Well, thank you, Jeff. moving to Lee specifically with some questions about the Parmer campus and Carlin's entrance into the market a few years back, and now Alexandria Real Estate Equities with their acquisition of a portion of the campus, and Carlin still with some development land there. Lee, would love to hear your thoughts on how it's been to work on such a big repositioning and releasing of the old Glaxo campus, and to work with two different investor groups that have some different visions, but at the same time ultimately are known around the country for working with some of our larger corporations on office, life science, and kind of high tech space.
So we put that real estate in the market on Glaxo's behalf late 16. I believe we had 40 tours from everybody you could imagine. And I tell the story all the time. It's no secret. Carlin showed up on a Monday, made a cash offer on a Wednesday, and closed 35 days later. And so for a company like Glaxo to be able to shed the overhead of a surplus campus like that is enormous. Whatever they sacrificed in exit price, they more than made up for in disposing of the carry cost for a campus like that. And those campuses are all over the country. I mean, that Glaxo campus is not unique. Big Pharma owns a lot of these all over the world, honestly. And I give Carlin all of the credit. They had seen the phenomena in the West Coast market and in Texas, where they had a 400-acre campus, and they essentially elephant hunt. And so this leasing broker was routinely turning away 20, 30, and 40,000 foot prospects, waiting for full building users to come along. And we were very fortunate that the market responded with our financial pricing and timing. And the other thing that Carlin loves to do is amenitize the campus. If you've ever been out there or heard any of us speak about it, I think we put in 20 or 25 new amenities on campus. So the goal was to offer a Google style, a Facebook style Apple work-life experience in RTP. And the market responded really well to that. So, I mean, it's no secret we got LabCorp into a large tranche of space. We got Duke into 3 different leases. We got a build-to-suit with Eli Lilly. We got Q Squared and IQVIA. And then just in January of this year, we got Averum to go next door to the DuPont. So again, I give Carlin credit for not wanting to chop those buildings into 20 and 30,000 foot spaces. And frankly, when you have 1.5 million vacant square feet, a 20,000 foot lease doesn't do that much for you. So we kind of seeded. I tell people the market found its footing really well. Hey, Mr. Sheehan, found its footing last year really well because Carlin was doing the bigger blocks. Longfellow was doing a lot of the single story blocks. Alexandria was growing a lot of its tenants. Park Point came online and anchored itself with those 2 first big leases. So I think we all see a lot of the same traffic, but in a way we were giving a different kind of solution to the marketplace. And Eli Lilly, that is a great story for this market. I mean, Lilly has 25,000 people in Indianapolis. They used to own the BioPoint building that Longfellow now owns. They remembered this market. They saw the campus, they saw the land, they saw the cost, they saw the utility infrastructure, they saw the speed to market. I mean, that is a big, big win for this market. It's 725,000 foot. And because they'd already been here, they'd already stood up a facility, they'd already done, big hiring here. I mean, it just all resonated. So that was Carlin in a nutshell.
And now with the Alexandria.
Yeah. So again, a strategic buy. They captured, a huge swath of income and new tenant relationships in one day. Not many people could have played at that level, very candidly. Although Jeff is right, the capital that wants to own real estate here is mind-boggling. I get calls all the time. People I've never heard of, 10 billion, 30 billion, 50 billion, 80 billion, 100 billion under management. What can we buy? And I always joke with them and say, just go buy some lab companies. You don't need to buy real estate, just go buy the actual companies, because it really is fundamentally different capital stack now that wants to own and invest in our market.
Well, thank you for that. And Jeff, kind of wanted to maybe dive into the Park Point project a little bit more. Obviously, we've seen it, and you and your leasing teams have done a great job of marketing it. And during the pandemic, you were able to find some success. And so, with the Grail lease, and then here recently with Charles River, and obviously you have some other activity going on right now. Just tell us how that project has, what it's been like for the past 12 to 15 months during some very uncertain times. And as we, push out the other side, hopefully, of the pandemic here soon, what are you excited about as the project delivers here in the coming months for Grail, for Charles River, and for hopefully some other users here soon?
Great, thanks. Yeah, so I'll tip my cap to my colleague Tyson Strutzenberg, as well as our leasing teams, William Allen at Trinity Partners and Doug Cook at Cushman. We're 41% leased on 650,000 feet, and we're about 15 months ahead of when we thought we'd get there. So that's obviously, as an owner, that's exciting and reflective of the environment that we're all excited about here in the Triangle. You had a few different questions in there, but big picture, looking back, we envisioned we weren't 100% sure that how this project would be received from a life science standpoint. We did underwrite it, and we did capitalize the deal with that business plan in mind, but we also had a creative office component, and of course that was all pre-pandemic. I guess enough said about how happy we are with the life science activity we've been seeing. Grail was a huge win for us early on. 200,000 feet, very exciting company. And again, indicative of why we're all on this call. Relo commercialization of a cancer testing paradigm, from California, needed to get it into production, and we competed with several states, and that was our original vision for Park Point, is to be able to give the Triangle region another arrow in the quiver to be able to compete on a national scale as well. I think you asked about, at least in the pre-notes, delivery and that type of thing. We are actually, Grail has CO'd, and they're hiring, and they're moved in. We toured their space earlier this week. It looks fantastic. And so the first phase, our grid west and east components are ready for occupancy now, and then we'll deliver the second half of the project in September with the fitness center, et cetera. So one final point on that note, we too were thinking heavily about amenitization, and it's really amusing to me that historically the amenity conversation for life science project has been behind most other product types, office, for example. But it turns out scientists are people too, and they like fitness centers, and they like convenient food services. They like outdoor gathering spaces and other amenities. So that's part of the vision for this project.
Well, thank you. And moving on to Greg. Greg wanted to start with some of Longfellow's suburban product, and then we can dive into downtown Durham and some of the exciting things you have going on there shortly. But tell us a little bit more about Longfellow. Obviously, you've been there for 12, 15, 18 months now. But prior to that, Longfellow came into the market, acquired Keystone Technology Park, and has made other acquisitions of historical flex product within our market and converted those into lab opportunities for users here within the market. And Jeff touched on a couple of things that Longfellow's been known to incorporate within their parks from an amenity perspective. So, in a broader question, tell us, about, the continued success at Keystone, why users want to be there, but then from there, the Discovery acquisitions, and ultimately the expansion of Discovery here over the next few years.
Yeah. So, Keystone, start there, is really, I think the success has to do with a couple of things. The location, with where it is there on Davis Drive, the kind of the overall health of that park, the landscaping, the feel of it, the buildings are just, they've held up well over the years. It truly is a life science community out there now. And as any of us who play in life science regularly, we know that that they like to be around their peers. So with companies like Locus and Alchemy and MedFarm and many others, it's just a very good, rich community of different life science companies. We're excited to this year start working on a full kind of rebranding of Keystone. We've just started on that, but it's probably going to get a new name, some new amenities, really just a good brand refresh. It's due. And I mean, the park is 100% leased. So it's not a necessity, but I think just kind of speaks to the overall success of that park, that we want to continue to keep it kind of at the forefront of our overall portfolio. So really just a great kind of litmus test for other projects that we've acquired, the Discovery buildings, and really these single story flex buildings they're ideal for converting them to lab, and we're seeing that trend play out with Jeff's acquisition at Southport and the King Street over at East Ridge. So if we keep this up, the flex market is going to completely disappear here, and those tenants are going to have to start looking elsewhere. But Discovery.
If there are any Merit guys on the phone, you're welcome.
Discovery, we're anybody that's been out there recently, it's an active construction site, making a lot of improvements to those buildings, just kind of the exterior with site improvements and enhancements. We're going to do some outdoor amenity spaces. To Jeff's point, life science and lab tenants, they like amenities as well. So it's kind of a moving target with amenities right now, just because of COVID. And I think we will clearly get back to a point where indoor amenities are welcome and used regularly. But it certainly forced the conversation to get a little bit more creative and think, what can you do outside? We live in a spot where 9 or 10 months out of the year you can enjoy being outside some. So we're looking at ways to diversify amenities at all of our properties. But Discovery, we've landed a few exciting deals there, and are really turning the corner to turn that into a life science campus. Icogen has moved in. Life Edit, an exciting gene therapy company, they've moved in. And Zerna is a smaller company that's spinning out of Chapel Hill. They're set to move in about a month. So had a few good leases signed out there, and working on a bunch of other stuff, and really excited to expand upon that campus with the land that we've put together on Watkins Road. As we've spoken with some of you all here in recent weeks, we've hired Little to work with us on that project. It's going to be a 23-acre life science campus, probably going to be 4 buildings of about 150,000 square feet each. So 4-story buildings, probably going to have some structured parking to go with that, to help with some density. But really will be a great extension of what we have at Discovery now, and really kind of speak nicely with the Wake Tech RTP campus that's growing on the other side of Watkins. So it's going to be exciting to see that part of Perimeter and that part of Morrisville really transform over the next couple of years. Those are the 2 main hot projects we have going on in kind of the RTP market right now.
Thank you very much, Greg. I appreciate that insight. And, one thing when just kind of looking at the park, again, before we, dive into downtown Durham and maybe some other sectors of the market, as that submarket continues to grow and land becomes tighter, but at the same time, companies want to locate there due to the ecosystem that's already there, how will your companies or your clients and maybe other investors coming into the market, kind of grow with us and maybe change the landscape of the real estate out there? Greg had referenced multi-story buildings, structured parking. That's something that's relatively new for Lab, but we've talked about amenities. We're talking about going vertical. Just kind of tell us a little bit more about what you think is next out there, and then how unique will it be to the market, or how unique will it be to build that type of product compared to what we've seen here over the past 10 to 15, 20 years with traditional leasing. And that's open to anyone to get started, if it's Lee or Jeff or back to Greg right away.
Well, I'll go first. I mean, if you look at what I call the larger ring around RTP, it really extends from Franklin. I've got it on my map here. So it extends from Franklinton, North Carolina, with Novozymes, all the way to TRAOBA, United Therapeutics, all the way to Pfizer and Sanford, Grifols, and these are 500 to 1 million square feet each. And so they're largely, bulk manufacturing facilities. But as the park fills in, I mean, you'll have to see the industry go. Obviously, just this week, we saw Fujifilm move south to get the land that they need and to sort of stand up from scratch a facility of that size. 3 new buildings next to Pfizer and Sanford have leased in the last 18 months at, I think, 100,000 feet each. So I think you'll continue to see the manufacturing move. The R&D is still going to be next, as close to the universities as it can be. And I think that is, I give a lot of tours of the park and talk to a lot of people about, can we do this and pick your city? I think as long as those 2 med schools and all that NIH funding funnels through RTP, Durham and Chapel Hill, it will continue to be a focal point. NC State, I've done lab space at NC State. We just don't have a med school there. We have the vet school, we have textiles, chemistry, engineering, architecture, crop science, which is a huge industry that doesn't get talked about as much because those guys tend to own rather than lease. But I still think the Airport West is going to be the concentration for R&D space.
I would agree with you almost across the board there, Lee. A stat underscoring your point about the manufacturing, the biomanufacturing, with the recent announcement of Fuji, et cetera. There are only so many sites. Those tend to consume a bigger footprint, right? There are only so many sites in RTP proper, in and around, that are left. We've all the developer community is gobbled up most of the bigger, easier sites. So I do think you'll see those continue to ring around. But I think we're gonna continue to see more of those. Tyson and I were looking at some stats this morning. 1,220 clinical trials ongoing at the end of 2020. 150, a little over 150 of those were in phase 3. And so the FDA is approving, they'll approve 10 to 20 cell or gene therapy deals a year over the next 5 years. So if each one of those is like, an ad verum or pick your recent announcement, they won't all come here. But if you could have 10 to 20 in the market for GMP type space, that really bodes well for the market. But historically, Main and Main for bread and butter deals, I think will continue to be RTP.
Yeah, I agree. And obviously there's only so many of the Discovery at Perimeter or Southport or East Ridge opportunities. So, I think moving forward, whether obviously the biomanufacturing, those do require much bigger chunks of land. There's only so many of those opportunities that exist. Kind of in the throw a kind of a 5-mile ring around the airport. So, I think you're going to see, the Holly Springs and those types of markets start to pick up. And obviously with Fuji, that's the most near example. But so I think you're going to see more of that. But I think as it relates to just kind of the lab and life science space, I think moving forward, the natural evolution of our market to really go from that kind of number 4 or 5 market in the country to taking that next step. I think it's going to be the mid-rise Class A product that you're going to see these campuses being built to accommodate these. There's more and more of these companies moving from the top 3, the Boston, Cambridge, the San Diego, and San Francisco, and that's what they're used to, and they can get it here for significantly cheaper. So that's where we see a lot of opportunity, and where I think the natural evolution of our market is headed, especially as Lee and Jeff both mentioned the amount of outside investment and money that is looking to get in the game. It's only natural that we head in that direction as a market. So,
and we haven't really talked about economics on these deals, but lab is going to pay more than an office tenant. And so the market is really, I've seen very little pricing resistance for what these facilities cost. They know what they cost to build because they build them all the time. So, I mean, we're seeing $35 to $40 triple net rents on some of these newer spaces, and the nets can run $8 to $15 a foot, just depends on what you're delivering. So I've been doing this long enough to remember a $30 full service office rent was a groundbreaking event in our market. And that's a pretty routine single story lab transaction now, $30 for 7 to 10 or 15 years.
And while we talk about economics a little bit, or just, the cost in general, wanted to pivot back to Jeff with Southport. Obviously you made a very strong acquisition there of a very notable park within our market. Numerous buildings up to 1 million square feet, a lot of traditional flex users that are paying, let's call it maybe even high single digits, low teens per square foot. And as our market evolves, there's going to be price impacts on a lot of users here. Tell us what that project has been like so far. What is the vision? What are the goals? And kind of how do you see, leasing activity going over the next, 12 to 18 months?
So the business plan on this one is unlike anything I've done in my career, in the sense that we're actively trying to create vacancy. I spent my whole career trying to eliminate vacancy. So it's been a little bit of a head shift to get in that mindset. And frankly, it's not very fun telling a tenant that you really don't want them to renew. Tenant who's been there for 10 years, but if they absolutely must renew, they're going to need to double their rent. It's not a fun conversation for us, and certainly not for them, and or for their broker, for their tenant rep. So we're trying to do the best we can through those uncomfortable conversations, and try to be as accommodating as we can as we make this transition in the tenancy. So that's probably headline. We're very pleased with the deal activity so far. The big adjustment, as Lee and Greg know all too well, is that the sales cycle can be a little slower. The build out time can be a little slower than historically on a flex or a warehouse or an office deal, other product types. So that's just something to be mindful of. But our prospect list is fantastic, and overall we're still really excited about this opportunity. We paid a lot more than Longfellow did for our flex, and actually we sold the same product 3 years ago to Longfellow, not realizing the business plan, and now here we are a few years later, back in the game with our heads straight on what we should have done with that single story product at Perimeter Park originally.
Funny how things evolve. All right, so turning over to Greg and wanted to talk about downtown Durham a little bit. Obviously, we referenced the Fujifilm announcement, but there was another big announcement last week related to Google taking space at Durham ID as they plant a flag here and try to figure out their long-term goals for 1,000, maybe even more jobs. Tell us how activity and the overall project has been like. At Durham ID. You've had Duke, you've had some other tenants that have leased space, but then you bring in a Google and you're still talking to other life science users and looking at, expanding that campus by a significant amount. And so I guess, to make it a more specific question, how's the activity been and what do you envision happening in downtown Durham, specifically with Durham ID over the next 5 years?
Yeah, obviously huge, not just for us at Durham ID, but for downtown Durham and for this entire market. An announcement like Google is huge. So we're thrilled to have them here. Durham ID as a whole, 27 acres, was really kind of originally designed to be an innovation district, and at the time, that probably meant more kind of office and technology than a heavy life science focus, and much of that was because of the focus of our previous partners in the project. But we saw an opportunity last year with WeWork being in 75,000 feet at the 300 Morris building, and just some of their efforts globally to look at where they could reduce some of their footprint. We saw an opportunity to kind of strike quickly and activate a building in a part of the market where there's a big need for lab space. So, I mean, there's literally nothing available in downtown Durham right now for lab tenants. So, as some of these companies that are, whether they're in biolabs or some other small building incubating out of Duke, when they grow and they need space, they've got to leave downtown, and a lot of them don't want to. They like it down here. They want to be here. So we bought the 200 and 300 Morris buildings from Bain last fall, and immediately started plans to convert the 300 Morris building into a lab building. WeWork moved out in January, and DPR is getting ready to start construction on some pretty massive base building improvements. And then we will deliver 100,000 square feet of speculative lab space in this building. So, it's going to be a variety of different sizes, ranging from kind of a half floor down to about a 5,000 square foot space. We're going to keep the stairwell that connects the top 3 floors that WeWork put in, and really try to create a pretty cool, connected life science neighborhood within this building, where tenants can move in quickly. So speed to market is something that we're hearing a lot. There's a lot of demand for space as quickly as possible, and to Jeff's point, lab spaces don't get built overnight. So we're moving ahead quickly with that plan. We've got great activity from a number of tenants who are downtown, and they're thrilled to hear that they're going to have an option to stay down here. And moving forward, we've got 4 more sites in the districts that we can build on. Right now, we plan for about 200,000 square foot buildings, but in the downtown environment, if we need to go bigger, we can. The plan is to continue to build lab buildings. We'd love for Google to throw a little wrinkle in our plans if they choose to stay long term and do something bigger here. But right now our plans are to move ahead with the next phase, which is the C4 site. It will get a better name than C4 soon. We're actively working on that, but some of you all have seen plans for that building, and we plan to break ground on it this year and deliver it, if not late next year, then early in 23. So a lot to come in downtown Durham. I think you're going to see some other lab buildings pop up over the next couple of years. Wexford is moving on their project. So I think it's going to be a growing life science community down here, and it's easy to see why with everything that's here right now. So we're thrilled to be a part of it and to put some space on the market that is much needed this year.
Thank you, Greg. And Lee or Jeff, if you'd like to chime in about downtown Durham. Jeff, I know that Trinity Capital has some involvement in a development going on down there with a lab component to it over at the Roxborough. So it's an exciting time to be in downtown Durham, and would love to hear any insight that you all. I know that I didn't specifically ask for your input on it in the pre-questions, but would love to hear any feedback that you all have about what's going on.
Yeah, thanks. Obviously, we're big believers in downtown Durham. When we made the investment in the Venable and going vertical with Roxborough at Venable, the big question that capital and the question mark, just generally is, okay, Duke seeded all these deals all these years. What happens when they stop? Do other tenants really want to be there, et cetera? And I think life sciences will be a big part of the answer to that question. We're seeing a lot of interest in downtown Durham, just generally, and specifically from that user group. We did set up Roxborough to be able to accommodate lab deals, and we're really excited about just the science that's going on there in our existing tenant base. With precision bio, gene editing. I mean, when you were younger and people talked about gene editing, it was in the same vein as Star Wars and spaceships, et cetera. And here we are, and companies are actually creating technologies to utilize it. So bullish on downtown Durham as well. I do think you'll start to see a rent gap, and you'll start to see some tenants make decisions around that rent gap. At call it $30 net, we're half of the big three markets, Boston, Bay Area, and San Diego. And in an urban product type, you're going to have to ask more in rent than you are at a Discovery or a Southport. So I think you may see some decisions being made as those rents gap, of course, signal to everyone we're going to continue pushing rents at every asset we have. But I think you'll see a gap with the urban product type.
I would just say, some years ago, I was leasing in RTP, and we convened a group of entrepreneurs from downtown Durham. And I'll never forget, they were basically saying, there is an authenticity and a grittiness to a city like downtown Durham that you just cannot reproduce in a suburban environment. And I think companies that sort of are birthed there are going to remain loyal to it until they get to be some enormous size. So I think downtown Durham is. The food scene is incredible. The entertainment's incredible. It's a must see on any real estate tour that we give to investors. I think it'll continue to do very, very well. And I think Jeff's right. Tenants are willing to pay for a best-in-class experience, be it in office, be it in life sciences, be it industrial. And so you look at the rents that North Hills can command, or the new towers in downtown Raleigh can command, or these newer, more complicated laboratory buildings are going to have to cost more money. You just cannot build them. And so, I believe tenants will continue to step up and pay for that. You know, not everybody's moving from New England to RTP. Some people have to make a decision that that rent gap is worth it for their business. But they're
Amen.
willing to pay the freight in downtown Raleigh and downtown Durham and in North Hills for Class A environments and really much more complicated and richer real estate experiences than a suburban building.
Thank you, Lee. And now, knowing that some might have a hard stop at 1, I've got one final question, and then I want to open it up for questions from the rest of the participants on the call here today. And this one is a broader question. You know, it's really just what's next. And then I guess maybe as a sub question there, you know, we've referenced Holly Springs, but we're starting to hear some rumblings about a life science building or potentially happening in Raleigh. What is it, you know, what's next is the first question. And what is it going to take, you know, maybe the Raleigh proper to get into the life science industry, like the Research Triangle in downtown Durham and some other towns have been able to do?
Look, I think Raleigh will get there, honestly, pretty quickly. You've got pretty savvy capital and development experience that lives in Raleigh. I'm looking at a couple of them. So, I mean, I think you will see, and a lot of the talent does live in Raleigh. NC State does generate a lot of business activity, a lot of science and engineering. I mean, I can name a handful of companies that left NC State for RTP because there just wasn't an alternative. Now, will that translate into 100,000 foot pre-lease with, you know, a brand? I mean, I think probably not. You got to walk before you run. But I'm talking to folks about conversions in Raleigh. We're talking to folks about conversions around, you know, John Kane's announced his innovation district. He was just on the TRAOBA or Space Awards a little while ago talking about that. So I think Raleigh will find its footing quickly. We are a vibrant, you know, capital city, and NC State is a massive employer, and a lot of innovation goes through there. And there is lab on NC State that is leased. Pat Gavigan sold 2 lab buildings last year to Ventas on the Centennial campus at record prices. So there is going to be continued demand. The new crop science building in NC State's $160 million research facility on that campus. And so again, anywhere you have smart people and money, you generally have ideas and demand for space. And so I think Raleigh is, you know, folks like Jeff and Greg and some of our clients will continue to look for ways to provide that kind of real estate here.
Yeah, I agree. I mean, I think what's next for us, you know, I touched on this a little bit earlier, and I think you look at what happened in 2020, you know, in the public markets, biotech IPOs were at an all-time high, both in activity and in volume. You know, venture capital funding, all-time high in 2020, off to an incredible start first quarter of this year. I think with close to $11 billion in venture capital investments through like the beginning of March. So I think those trends from 2020 are clearly, you know, already leaking into this year and only gaining momentum. So, you know, that's from a high level. And I think we're going to continue to see and feel a lot of that, that growth here in our market. And again, I think what's next for us and becoming, you know, a top 3, a consistent top 3 is really continuing to evolve and build new product, purpose-built lab and R&D and biomanufacturing product to go along with some of these huge wins that we've had with the Lillies and you know, the continued growth of Duke and Fuji. And so I think it's like, you know, what's next is keep the pedal to the metal and don't let it, you know, don't let it slow down. And I think a big part of that is, you know, looking east and looking at ways that we can piggyback off of some of the great things that come out of NC State in the ag tech world over there, the engineering, you know, background and talent over there is undeniable. So I'm with Lee. It's hard to tell what is going to eventually be the catalyst, because like I said earlier, these companies like to be around one another. Is one of them, a big one, going to take the first step and build a headquarters and then just hope that some of their peers kind of follow suit? That seems like a little bit of a stretch. So I don't know exactly what it's going to take, but I do think, I think that's an important part of the evolution of our market for sure, is to find ways to incorporate what great things Raleigh has to offer, and really continue to grow the life science footprint here as much as we can.
So going back to the data, 2015 total venture and other funding for the life science space was a little over 11 billion nationally, and 2020 it was a little over 30 billion nationally. That makes me start thinking that we could be, on the front edge of this thing, for us locally. And that very quickly leads me to start thinking about, are we making enough investment in our infrastructure, to be able to accommodate the growth and not kill the golden goose. Transit is a topic that quickly comes to mind. The three of us just sat here and said we thought RTP was still main and main by and large. I-40 in before times, and who knows what after times are going to look like for any of us, but in before times was a challenge for growth in RTP. So I think hopefully what's next is we get broader support and better leadership on a joint transit solution for the Triangle to accommodate this growth.
One thing Jeff said that is held us back for as long as I've been doing this, there still is not real resident venture capital here. The Hatteras funds in Durham, everybody knows those guys, Bob Ingram's group. They have 500 million under management. That's today, and they've been in business 20 years. And Jeff just said 30 billion deployed last year. We just don't have the capital to grow our own companies here. And so that has been a 25-year, I guess, headwind we've been fighting as a market, as a region. There are a lot of wealthy people in North Carolina. There are not a lot of wealthy people in North Carolina who stand up venture capital to invest in life sciences. And so if somebody can unlock that, then we really would that would do more to accelerate this market than anything else. We can build the real estate. We've got to have the companies, and you cannot get the companies going. These are 5 to 10 year bets. And I think a lot of people don't understand that. The TI that our clients and Jeff and Greg are investing in these companies, you're talking $5, $10, $15, $20 million per transaction. I mean, you're made a venture capital size investment in the company, just as their landlord. And it costs, these jobs are $100,000 a year. You get 100 people on the roof, you've got a $10 million payroll. So again, if there's an Achilles heel to all of this success we've enjoyed, it is still 25 years later, we do not have a deep bench of really mature venture capital in our market.
Well, thank you all for all of your insight and comments today about what's going on in the life science sector of our business, whether it's in RTP, downtown Durham, and what the future holds. So really appreciate you all taking the time here today. I'm going to let Hastings, who's controlling the Zoom, open this up for questions and allow everyone to kind of chime in. I have one in my chat now, but we'll surely welcome any and all sorts of questions we might have from the audience. So the first question is more of an open-ended one from Chanel Hall about coordinating a core tour, a tour, pretty much trying to have a TRAOBA type event to see some of these new projects, and then talk references getting into downtown Durham a little bit more. And so Chanel, I'll take that one on. Yes, we do need to find some ways to get this association together again, see some assets, understand what's going on in terms of the changing landscape of our real estate market. So we will be looking at that with the board and finding creative ways to get everyone together outdoors or whatever the case might be here over the next few months so that we can get a better educational experience about what's going on in the market from a real estate perspective. So, but if there are any questions for Lee, Jeff, and Greg, please feel free to type them in, or Hastings, again, if there's a way to kind of just unlock the mute buttons and see if anyone wants to chime in, happy to do that. And know that it might get loud for a second with people talking over one another, but we'll find a way to get the questions to each of the panelists.
Yeah, everybody should have the ability to unmute themselves should they have a question. You also have the option to raise your hand as well.
We're getting off easy.
Tell you what. Must have covered everything.
Or they all fell asleep.
That's right. That's what I was ready to say.
Hey, this is Brian Farmer here. How you guys doing?
Hey, Brian.
Great panel. Isaac, good job hosting this. And good to see you guys again. Hey, I don't think y'all talked about TIs. Maybe it might be worth mentioning, kind of a range of TIs for these $30 triple net deals that Lee's doing, left and right. Thank you.
Everybody, I'm sure, has got a little answer here. This question, thanks, Brian, for the question. Yeah, I go back to where Lee started at the beginning of the call, which is, people have been doing life science deals, lab deals in this market for a long time. I used to do them back in my Duke Realty days, although the way I described it is we'd sort of back into them or we'd do them reluctantly. And the issue was the TIs. We said, fine, we'll give you an office or a flex rate, and you got to put in the TI. And the market's become much more sophisticated now and is willing to take more risk in those upfits that it'll be salvageable for an ex-tenant in the event of a failure or a change in business plan. We're underwriting on our deals $100 to $150 a foot in TI, depending on the rate and the package, et cetera. So it's a whole different paradigm. But as an old school office developer, that's a big adjustment for the entire deal structure.
Yeah, I mean, that's spot on. And sometimes people are asking to amortize on top of that. So a 100,000 foot tenant needs a $15 million TI package, and they've been in business 9 months. Right? I mean, that's just but there are folks who are very good at underwriting these companies and understand the science. And, again, that's kind of where the experience comes into play. Again, we all field calls from folks who want to do life sciences. My usual answer is, you've never heard of the company, they probably don't make any money yet, and you won't understand their science. But it's still $150 a foot TI package. And I'm being a little facetious, but I mean, that's not that unusual. A lot of these companies are very young. If they do really well, they'll probably get acquired. Jeff probably did at Trust, right? I think Cindy Whitehead sold that company for $1.5 billion with 40 people in it. The Vexus company and RTP sold to Novartis for $9.5 billion, still pre-revenue. So, it is, but from a developer's point of view, if you've never underwritten these kinds of companies and you're sitting there trying to decide how to make a $10 to $20 million placement of capital, it's just you can do a whole bunch of law firms with $20 million, right? Mm-hmm. So that is just the world that the market expects that now. I mean, it is that simple. the tenants have adjusted to that and the rents that justify it.
Yeah, I think we're in the same boat for sure. As Lee and Jeff just mentioned, it's an interesting dynamic in these deals, trying to marry everything together. Spending a ton of money and asking a pretty significant rent of companies that don't have much of a track record. They don't have much money in the bank, if any at all. Their burn rate is alarmingly quick. But you've got to invest in the space. And there's, it's different with a second generation lab space where you can, especially one that is, a fairly generic R&D kind of lab build out, where you can give somebody, $40 a foot to make some updates and improvements to it, and still get the same rental rate. Those deals become a lot easier. But we're not at that point in our market right now where there's just a tremendous amount of, any tenant broker on here right now knows that the supply of that kind of space is extremely limited, and it goes very quickly. So, $100+ a foot out of the gates all day long. And to Lee's point, you're getting a lot of requests for additional money on top of that. So it's an interesting, analysis. Every deal is different, and it is a much different world than, kind of your typical law firm deal. So it's been fun for me to be learning more about it here over the last year and a half or so. But yeah, they're rich deals for sure.
So I was sent directly a question from Daniel Chang, specifically asking about the North Raleigh, portion of our market, and if there's potential for life science companies to go there and locate. Obviously, Selectus is there in a building off Sumner. They should be opening their 85 to 90,000 foot facility within the next couple months if they haven't already. But from there, have you or your clients looked at that portion of our market as an untapped life science corridor?
Got a lot of calls.
I'll
Go ahead, Jeff. Yeah.
go ahead, Lee. It's all right.
No. Yes, we got a lot of calls about the 52 North, and can it be conducted as easily and quickly and successfully as everything else? So there was a big 90,000 foot lab tenant in that park once upon a time. It's in there, RTI's in there. I mean, there is a pulse of life sciences over there, but to me, we'll just have to see. Somebody will probably make that bet, wouldn't you think?
Yeah, I have a similar viewpoint. My knee-jerk reaction is, just like with any other product type and any other tenant base, they tend to want to be where the other like tenants are, right? Office tenants don't want to be pioneers and be off by themselves. No real estate director ever got fired for, parking their business next to Microsoft or Lenovo, et cetera. And, warehouse tenants, they want to be in parks with other warehouse tenants. So I think there is some of that going on with life science. So my knee jerk is, I don't feel North Raleigh or East Wake yet, but just like with the other product types, once, it's going to be a supply and demand deal. We just said we think we could be on the tip of the iceberg and demand's going to blow us all away. So what happens when demand blows you away is you start to stretch out into newer markets.
Yeah, I would echo. I would echo what Jeff just said. We really haven't. Our company has not started to look at that particular part of the market. It's tough to tell, what it's going to take to drift over there, and for some of the activity to really pick up over there. But so far we haven't really looked over in that part of the market yet.
Okay, thank you so much.
And now I know that Jeff has a hard stop at 1, And I know that obviously our panel and our time stops at 1 here today. So just wanted to, circle up one more time, make sure there are no other questions, lingering amongst the group. And if there are, if we don't have time for them here today, we can send them out to everyone or to the panelists and then have them provide their insight and get them out to the rest of the group. But just one final call for questions.
Well, if there aren't any, Isaac, thank you for hosting, and thanks for having me. Enjoyed the conversation, Lee and Jeff. I think Jeff had to jump, but yeah, if anybody has any questions about anything that I mentioned within our portfolio, please feel free to give me a call. It's nice to see some names. I wish we could have done this in person, but hope we get to see everybody here soon.
Thank you. Take care.
Thank you, everyone. And we'll be in touch soon about future events and next steps for the year.
All right. Goodbye.
Thank you.